Hi, I'm Mark and welcome to Little Known Stocks, the show where I try to prove that being boring and doing your research will make you money. Now today I'm making a slightly different type of video and I'm just testing the water and seeing if people like this type of content. So if you do like the video, it would mean an extra lot if you did like and subscribe. It just lets me know to make more content like this. So today I wanted to talk about something that's applicable if you're down significantly in the stock market, if you've been waiting for a long time in the stock market and the stocks haven't moved, or if you're up a little bit in the stock market and you're thinking about selling. And really it's a strategy that I use and hopefully you can take something away from it as well. So as I've said before on this channel, I started investing a little over a year and a half ago now, and I made some tremendous mistakes in my first year, largely to do with selling early, actually selling when I had made a small amount of profit, but I could have made more, much more profit. But like I said, I think what I'm going to talk about now is relevant if you are losing money on shares, and it's relevant if you've been stuck in a share for a while, it's not really gone anywhere, it's stagnated and you're getting worried about it and wondering whether you should hold it or sell it. So really, the psychology is very simple. If you have a share and all you're interested in is making a quick buck, quick profit, you don't know about the stock, you don't know the fundamentals of the company, when the stock falls or when it rises slightly, you're much more likely to either sell it at a loss or take a small amount of profit when, if you held it for longer or if you understood the fundamentals of the business, you could have ended up taking a significantly larger sum of profit. Now, taking profit is never a bad thing in a stock. If you've made profit on a stock, that's great. You should consider selling sometimes, or at least downsizing your risk to take profit. But sometimes, if you really understand a stock, and I'm talking about in my personal portfolio, the likes of Big Digital Assets, Tattooed Chef, MP Materials, Clever Leaves, stocks that I really know and understand, I've gone from being someone who wants to make money in the stock market and wants to make a quick buck to someone who is actually a hobbyist, if you like. I am a fan of those companies. I believe in those companies. And I'm spending every day looking for research on those companies. I'm really invested in how those companies are going to do. Now, that doesn't mean I'm going to hold those companies no matter what. If they fail or if the fundamentals fail, I will treat them like I should and I will sell out of them or I will downsize my position. But equally, if I'm up, so for example, if I take Big Digital Assets, Tattooed Chef at the moment, I'm up 30%, but I'm very comfortable holding. And I'm going to wait for the future potential. I'm going to wait potentially several years for both of those companies to grow significantly more and not just be satisfied with my 30% at the moment. Now, there are some more speculative plays where I've been up 20-30% and I've taken the money. That was the right thing to do because ultimately I didn't believe in those companies enough to hold them long term. So you just need to think about your own strategy, what you want to achieve, but really you need to understand where this company's going over the next 6 months, a year. Is it going to grow 100%? Some companies that I'm invested in, I expect to grow 100% over the next 12 months, and therefore I expect to be able to sell them for significantly more then than I can now. And I understand where that business is heading, I understand their business model, I understand the risks, and some companies I have where I watch out for specific risks. Take GoPro as a good example. I have invested a fair amount in GoPro because I believe that their new model of subscription is going to drive much more profitability. But I do have some watch outs in that company, and so I haven't invested as much as I normally would. And if things change and my belief that these risks may come true comes to fruition, I know that I will sell out of GoPro. I will have taken a reasonable risk, but I will have sold at an appropriate time. And just with GoPro as an example, if they go back into retailers in a big way and their profitability is diluted, then I will consider selling my shares depending on how much that profitability is diluted. Now, I know in advance what I'm going to do there. I have my strategy and I feel very, very comfortable sticking to it. And that's really one thing you have to take into account. You have to know the company, you have to know the fundamentals, you have to know what you want to achieve through that company, what you want them to achieve. Maybe have a price target, although that's not necessary. I think, you know, you can never tell what the stock market's going to do. You could have amazing earnings and not move, or you could move and have nothing happen on a particular day. So price targets maybe not, but you certainly need to understand what are your things you're looking for to invest more in the company. Perhaps they make mergers and acquisitions, perhaps they're raising capital for a particular project, perhaps they're investing in a particular sector. And you need to know your risk factors, and you need to know, okay, if these three things happen, these are red flags for the company, so I'm going to walk away. And I'm going to be happy that I walked away. I might have lost potential share gain in the future, but it doesn't fit with my personal strategy and my belief in what this company is doing. So all in all, just do your research, and this is something that I will always stick by now. I have fallen foul of not doing research in the past, and I've sold out of stocks very, very quickly. And Tesla is my famous example. I doubled my money on Tesla. God, I could have done a huge amount more if I would have understood the company, really believed in the company. And hopefully some of the stocks that I'm holding today, I will retain for a very, very long time, and they will reward me for that because I understand the company. I'm looking on a daily basis for that news cycle, really excited about the company. I know who the CEO is. I know what their profit margin is. I know what their gross profit aspirations are going to be in the future, etc., etc. So I am on the ball. And really you need to be fans of the company, not fans of making a quick buck. You need to understand what's going on and really be invested in the company, not from a financial sense, but from an emotional sense almost. So that's really my thoughts on the matter. Very, very simple really, just know your stuff basically, but it's something that I certainly didn't have a year ago, and it is certainly making me into a better investor today. So if you have any strategies, I'd love to hear about them. If you have any criticism or anything that you want to say about my strategy, please let me know in the comments below. Otherwise, if you like this video, please give a like. If you didn't like the video, give a dislike, so it lets me know not to make another video like this. But I hope you found it useful, and have a good day.